Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Good morning, everyone. Welcome back to another Tuesday live stream. Of course, yesterday, Monday, we were out of the office, out of the markets due to the U.S. holiday. Hope everyone in the U.S. enjoyed their day off. I know I did. And we're back. Markets are lower. What's going on? Why is this causing the markets here down 1.7%? Pretty good little haircut here over the weekend trading, or opening up from the weekend trading. What we can see here is that we do have peak to trough on the on the NASDAQ, down about 4%. Nothing crazy here, but a little bit of a pullback, and NASDAQ is sitting back at support here around the 23,000 level. Let's talk about what's going on, whether this has potential to continue to sink lower. And to add into this, we do have some pretty broad-based selling here. On Friday, you had sort of a heavy selling specifically on the NASDAQ. Today, you have the NASDAQ joined in pretty good selling on the S&P 500 and the Dow Jones, and just as much so the Russell. So, indices are lower here. VIX is up 19.2%. That trade that I took on the VIX, once the U.S. market opens up, U.S. options market opens up, that trade's going to be looking okay. And I may take profits today. This is what we were looking for when I took the VIX long position. The idea was you may get, or I thought you would get, I didn't know you were going to get exactly this and right when it happened, but I thought, volatility is too low. And I think that there is potentially the possibility that the market is too comfortable, too cozy. And guess what happens? The market has some uncertainties, right? Back to the tariff story. What's going on with tariffs? Well, basically, a court ruled a lot of the Trump tariffs as illegal. And so now I believe it is on its way to the Supreme Court. And so markets are looking at that and saying, uh-oh, wait a second. We've got all these kind of changes in the way government spending is working that are now kind of reliant on the income that will be generated from tariffs. If tariffs are ruled illegal by the Supreme Court and they get knocked off the stage, Trump himself made posts on social media claiming that it could be pretty devastating to the U.S. economy, because at this point now you've built around this infrastructure of income from tariffs, right? There's a lot of money that are, from trade dynamic readjustments that are going to be flowing into the U.S. or continuing to flow into the U.S. They're already started. If you rip that out and we have all these other changes, perhaps where we saved money on tariff income, we gave it back in the form of tax breaks, other things, etc. If you are left with no income and more spending, suddenly that's very problematic and could cause some pretty ugly concerns. And so we've got a VIX jumping almost 20% today. The NASDAQ down almost 2% today. S&P 500 down 1.4% today. So my positioning, I feel very good about it. And I'm feeling a little bit justified. We'll see if it keeps going, but I'm feeling pretty justified in my long metals positions and my long VIX positions. And what else? Covered call positions. Pretty much all my covered calls here today are looking amazing. Right, so I sold calls on Tesla, I sold calls on Nvidia, I sold calls on Amazon, Google, stocks that I love for the long term, but believed that they had gotten a little stretched to the upside and that there was too much satisfaction or content with the market. So of course I'm feeling good about those positions going into this week, and do think that there is potential. Of course, this market loves to buy every dip, so you may get bounces. But point is, I just think there's limited upside to stocks right now. I've been saying that for weeks, and the market has gone nowhere for weeks, which has been great because I'm not short the market. I've sold covered calls on a lot of the positions that I own. I will show you that. Let me take a look at here. If I go into my positions, now again, the US market is closed. And so my options trades, I'm down about 1% on just my stock positions today. But once the options market opens up, a lot of the covered calls will actually come in to cushion this a little bit, because my covered call positions are not open right now. So I know it's a little confusing if you're not an options or stock person. The US stock market opens in 20 minutes. Once that opens, stocks trade in the pre-market, but options are closed, right? So once the options market opens up, this VIX position is going to look pretty good, right? Because VIX jumped in value. I have a call position essentially on the VIX. Once that opens up, that'll look decent. But you can see all of my positions, see these little 3 dot things. Without knowing much about this, I have covered calls, which means I've covered my upside, limited my upside, but collected payments on all of these stocks that I own. Robinhood, I mean, we're going to get out of Robinhood today for a very nice profit. Once that opens up, I'll pull that open, but looks like we're getting out of the covered calls on Robinhood today, which has been a campaign here for the last few months for me. I am finally seeing the rewards of selling covered calls on a lot of stocks. Stocks moving lower here today is obviously it's a net negative. When you're covered calls, you don't want the market to drop per se, but you're okay if the market goes sideways. And so the market going sideways is just fine for me. Let's talk about the silver trade. I'm still in it. Got a little bit of a pullback here happening, and I've got my stop trailed into profit. This trade went absolutely crazy. I'll pull it open here on SLV. The trade, I mean, look at this. This is crazy. Trade is up 11,500, even with the pullback here this morning, which is fine. Plan for me on this one is to look for a possibility of higher lows. So if we do see price make a push back towards those highs, I'm going to trail this stop further. Otherwise, if the market pulls back, right, if we pull back into support, cool to still hold. Where I'm not good with holding it is if it breaks support here, then I'm going to take profits. Is it possible that I give back a lot of these gains? Yes. But by holding on, loosely, I also have the potential that silver could round out, bottom out, and keep going higher. And if that happens, that will give me the opportunity to trail this stop further into profit. But I've been way more favorable to the metals here recently. And so, I'm feeling like I'm in a good spot here to go into this week, even though, yes, I am down on my portfolio with stocks down because I still own a bunch of stocks. I have covered call positions that are helping. They will, once the options market opens up, to help cushion some of my downside risk on the stock side of things. And on the commodity side, we're doing pretty good with the silver long position. Giving back some gains here today, down 1% on silver. Perfectly fine, like I said, to hold silver for me as long as we can hold support. If we come into this area, chop around, it's normal. It's a part of an uptrend. If we come down and cannot hold this area, then I take profits. It's a good spot to be in. I wish I was always in this situation. I wish it was always a question of how much am I going to make, not if I'm going to make money, right? But of course, trading is not always like that. Can you do covered calls with size less than 1 on any broker? Roberto, no, you can't. However, you can do what is called a credit spread, a bull put credit spread, or a bear call credit spread. I would encourage you to search that topic. I also have it on I know you watch my Trader Nick Stocks channel. If you watch my trading options for beginners video that I did on there, I discuss in that one that long, like 30-minute video, there is a conversation about how to trade options on smaller accounts without taking assignment on 100 shares. Yeah. Got to be rich to sell covered calls? Not really. Not really. And you can also, like I said, you can do call credits as well. Like you can sell, like what you can do is, let's say that you're long, I don't know, let's do like Delta Airlines, for example. Let's say you have Delta Airlines, right? And if you own 100 shares, yeah, that's if you want to do covered calls, I guess that's fair. You'd still need 6K to own in Delta in order to have one covered call option. So I guess that's fair. I take it back. If you're selling a call credit spread, though, you can do that trade for sub $100, right? You can risk less than $100 on that trade. So if you are doing credit spreads, which is the situation where you are selling a call and buying a call, right? And that the net result is a credit to your account, right? Anyways, testing support in the NASDAQ. Let's see where we go here. NAS on the 4-hour chart looking pretty red here, looking like we are trending lower. Down to this support level, we will see if price reacts here. If you're going to get a bounce today, my guess would be in this area. We'll see, though. Again, previously, this was a strong area of support. Did you study a master's degree in finance? No. I went to school for computer science, which actually, in my opinion, probably helped me more than a economics or finance degree would have, because I built systems to help me study finance and economics. Like having the right systems is really important if you're going to try and get an idea about what the economy is looking like. Building the right tools to track it. I learned all that stuff from YouTube and Google and reading and listening to podcasts and conversations. Like I'm, I guess, self-taught in regards to the economic data side. But I've also been doing this for 10 years almost. So it's not a quick learning curve by any means. Hustlers University. Anyways, I wanted to also take a look here quickly while we're on this page. U.S. economic heat map. I'm thinking about adding a couple things here. I want to add a gauge for inflation. I want to add a gauge for growth. And I want to add a gauge here, like these. I want to add gauges for inflation, growth, and jobs. I think that would be really helpful because, yes, you have it all here, but this would break it into 3 categories that I think would be really helpful as well. So I think that would be really helpful for this page, especially because this page has a lot of stuff on it. Anyways, let's see. Again, I'm going to keep an eye on silver today. What I'm looking for is a push back through those highs. If we can get that, I'm going to trail stops. If we cannot, I will continue to hold as long as we hold support here. Taking a look at gold here, gold had a massive, awesome move on Monday and overnight. Beautiful, beautiful stuff here. Concerns are back in play. This move, guys, this move was the last time the market was freaking out about tariffs, right? What's happening now? The market's freaking out about tariffs. If this thing pulls back into support, I like the trade quite a bit. I'm already long silver pretty heavy, but I'd be willing to add in gold to the mix on a pullback. I think this trade looks really clean. Gold is getting a really solid reading on the EdgeFinder right now and has for the last few weeks, but we finally got the breakout, right? So gold has been just doing nothing until all of a sudden back to business and gold is moving clean. So I love trading gold in this type of environment. You've got a break of long-term consolidation. It looks great. Again, I'm in the silver trade. I prefer silver more than gold, but I would probably add another trade, a small trade, just to get long gold because I like that trade setup quite a bit. But again, I prefer silver over gold right now and still do. Dollar index is up today. I thought that was kind of interesting. And in tandem with yields up, right? So the bond market is like, wait a second. So you're telling me if the tariffs get like overruled or whatever, we're going to just be missing all that income, right? Because we've like shuffled everything around. I was mentioning this at the start of the stream today. We shuffled everything around. We said, okay, now we're going to build a lot of our income, or a good chunk of income for the US government based on tariffs, and give away that money, or like in other places, do tax breaks, things like that. If you're overruled on tariffs, now we got a problem, because now you got income for the government just gets slashed if this happens, right? We don't know it's going to happen, but if it happened, you'd get income slashed, and handouts had increased on the other side. So bond market's like, wait, we don't want to lend money to that. So that's why yields shot higher here today. And so does this change probabilities for rate cuts? I don't necessarily think so. The bond market is clearly telling you, okay, a little bit of risk on that side. I think the Fed's still planning to cut rates, but this could be more of a structural concern about, like, do I want to lend money to the government of the United States if the spending is going to go out of control and we get tariffs cut back, right? The market initially freaked out about having tariffs put on, but now that they're on, the idea of getting them yanked out would cut out a lot of the income. So there's like this back and forth craziness. Anyways, NASDAQ is still sitting at that support level. Let's see what happens here. I don't have an interest in buying the NASDAQ at this time. I still think there is more room to the downside. I took profits on euro dollar, and I feel so glad that I did that, because I took profits like right there. Like I took profits right at the top end of this range. And if it does come down a little bit lower, I may take the trade again. But I took a plus 95 pip profit on euro dollar, took profits. Actually, I took trades on I took a couple trades last week, and I closed a bunch of them out yesterday. If I go to just my Forex trades, I closed my euro CAD short for about 26 pips profit. I took my euro dollar long, closed that one out for about 95 pips. And then I closed NZD CHF for 32 pips as well. So on the FX side of things, I've been busy. On the commodity side, I've been busy. Silver trades. And again, this is the beauty of not just trading one thing, right? So I don't just trade the NASDAQ or just trade S&P. I trade such a wide range of things that most of the time I'm able to find some good opportunities out there. So I'm still in the silver trade, managing, kind of just managing the trade. And on the FX side of things, just taking profits on several different things here in the last few days. Do you buy the bottom of the range every time? No, it is dependent on the EdgeFinder. EdgeFinder top setups page helps me to filter for trades that I like better. So we'll see. We'll see if euro dollar can come back down, in which case I might trade this again. Again, I took the profit. I'm euro dollar lower here today, obviously on everything going on with the market freaking out. And so if it comes down into the bottom of this range, I still like the trade there to potentially play that again. Oil prices are back up here. I do like the technical setup. Someone asked me about oil prices earlier. Am I still looking to short it? I just don't have the setup right now. So let's just look here at oil. Do we have oil? Yeah, see, oil is just right there, smack dab in the middle, neutral +1 score. So that's probably going to be a skip for me. Let's do this. So euro dollar on a pullback looks interesting. 10-year treasury actually interesting too. Sentiment score, technical score, economic data showing some cool down. My only concern with this, I mean, I have a TLT trade that's on, which is not looking as good today because you've got bonds lower, right? So I have a bullish options trade on TLT, 86 strike price. So these puts are now in the money, which is, as the seller of those puts, not great for me. But it's a small trade, and so I'll just manage it accordingly. If we do get the opportunity to get assigned some TLT, I'm also perfectly fine with that as well. The surprise trade today is going to be the VIX long call spread that I have. And I'm probably going to look to close that out. I think the trade, I need to check, but I think it was profitable above 18 bucks. So I'll check what it's at today when the US market opens up in 10 minutes. But I may just take a profit on that. It was meant to be a little bit of a hedge, but I also have short calls on like all of my stocks. So I'm going to selectively cover my short calls, especially in stocks I really like for the long term, like Robinhood, down 3% today. Like I'm going to probably just cover my or close my covered call position on that and just take the profit, which turned out to be a really decent trade for me. On indices, like I said, I would not be surprised if this turns into a little bit longer term of a, maybe we just correct sideways for a few months from here. But my bias, right? My bias when it comes to indices is going to be neutral. So what that means is that, do I think the market's going to crash? Nope. In fact, if it moved too far down and the value got good, I'd probably be buying stuff. But that's what neutral means. Neutral also means that if the stock market rallied through the highs, as it had been doing, which is why I sold calls on a bunch of stuff, I would be selling some shares or selling covered calls on stocks that I own. So that is what true neutral bias means. It means that if it goes down, we get good prices, I may look for some opportunities where it tilts more bullish. If we go higher, right, then I may stay bearish. When I say neutral, the reason I'm neutral is because what we do here, if you're new to the streams, we look at market sentiment. We look at things like the put to call ratio. So we look at options flows. We look at the commitment of traders data, which gives us an idea of what institutions are buying and selling. And we look at crowd sentiment, right? So we look at crowd sentiment, we look at all these things. That's part of our analysis. Then we look at the technicals. Do we have an uptrend? Do we have momentum? Do we have price action following through or not? And then we look, of course, at the big one, which is economic data, inflation's data, or inflation data, jobs data, growth metrics. These are things that we also want to look at to determine if there is a sustainable underlying fundamental trend. And right now, the top setup on the EdgeFinder is and has been for a while gold, and it was also silver. Silver lost a little bit of score. I think I know why. I think the put to call ratio kind of went crazy on Friday. Let me take a look at silver. See if I'm correct about that assumption. Yep. So people are buying calls. So I think let's look at the metals really quick on a put to call ratio. Okay. So put to call ratio, a lot of people don't use it. It's one of my favorite indicators for sentiment because we're just looking at options flows, right? So people are buying calls if they're bullish, they're buying puts if they're bearish. And so right now on the September 1st chart here, what we can see is that there's some pretty high call demand, right? So people are buying calls and things like silver. We take a look at gold. Same here with gold, right? People are buying calls on gold and silver. So the metals got really, all of a sudden they got popular. So people are rushing in to buy gold, buy silver. And so what that tells me is that you very well may get a little bit of the kind of like paper hands, if you want to call them that, or loose hands, people who are, rushing in buying calls. They may cover today or take losses. I mean, like late to the party runners. And so that's where I think like you could get some pullbacks, but that I ultimately don't think that is, I don't think this is the end of the uptrend in gold. That's my opinion. Gold and silver to me look good on pullbacks, but I think you had a rush for people buying calls right towards the end of this move. And that may be, again, doesn't guarantee that's going down. It just makes the risk reward look less attractive to me to buy gold at these levels. So if you give me a couple of days down on gold, I might even join that trade in addition to my silver one. So keep an eye on your put to call ratio. If you have the EdgeFinder, definitely will be interesting. I also, after today's price action, I'm going to tell you most likely that a lot of people on the stock market are going to be buying once this updates with latest data, once the US stock market opens up, and we trade for a day. This is 1 day delayed. Remember that we look at the options market flow at the end of the day. So we have to wait for the end of the day to see what, kind of what crowd sentiment is looking like. I'm going to give you a pretty good chance that you get a pop higher in the put to call ratio for SPX. Essentially thinking that, again, people are going to go, if the market's lower by end of day, there's a good chance that this put to call ratio kind of goes crazy, right? So if people are, starting to panic, if we start to break support, then the put to call ratio will start to really show, my best guess is it would really start to show huge selling, right? People panic selling essentially. And which, again, the put to call ratio is not a holy grail of timing by any means, but it is useful to keep an eye on, because I don't necessarily want to be like taking the same trade as the crowd per se. I'd rather wait for pullbacks, wait for opportunities where I can get some good opportunities. Why are US indices down today? US indices are down today because of the court ruling. It seems like that's the predominant thought, is the court ruling that may, it's going to the Supreme Court now about the tariffs placed on by the administration and whether or not they are legal. I'm not exactly sure which court ruled this, but a notable court ruled that those were illegal. Now it's going to the Supreme Court. So if they do get overturned, it creates some serious risk. Even I mentioned this earlier in the stream. Trump mentioned himself that if they get overturned, the U.S. economy will have it's like a wrecking ball. I'm paraphrasing, but it basically said it's a huge risk. And so the market's like, wait a second, is that going to happen? And so I think that is why you're getting some sell-off. Whether that's, regardless of the reason why, but for this week, I was already sort of cautious on indices. If you get a break through these lows and we start to see this, then you may genuinely be seeing sort of a head and shoulders pattern forming on the stock market, which could lead to, a little bit lower prices for a little bit. I would welcome that. I'd like to buy that dip. If you keep going lower, there's some individual companies that I would like to buy some positioning on. So, yes. Anyways, with that said, what else? Yeah, VIX is popping hard here, but I'm feeling really good about this concept because, again, indices had fallen off the EdgeFinder watch list for a minute now, which was definitely the right call, was to, again, look at the scenario. Why are indices not a bullish setup on the EdgeFinder? It's the data on the economic side. High inflation, slowing jobs data, lackluster growth metrics. That's what the EdgeFinder picked up on and said, nah, right? Not to mention, now you have NASDAQ starting to turn bearish on a technical basis. Like, you had some serious weakness on the chart. If you look at NASDAQ, right, here's what I'm worried about. First of all, NASDAQ's been underperforming the others. Tech is the most important part of the stock market. So you've had tech underperforming, rolling over, possible lower high forming here, especially if you break through these lows and close below. That's a lower high potential. Big red bodied candles, weak response to this one, follow through here today. Watch how it reacts to this support level. I think that's going to be very telling. If you get something closing and breaking below, it's going to be huge. Again, I'm not short the market. I have covered calls on, which is not shorting the market. It is sort of a neutral play. So I'm perfectly fine with thinking like if we get some further downside in indices. But where I'm feeling more convicted is, as I've mentioned, bullish on the metals. I'm long silver. I have a bullish options trade on TLT. I'm bearish on the dollar. So there may actually be some pullback plays for me here today on the dollar, which I'll talk about more in my video today. I think I'll talk a little bit more about the dollar. We'll film that shortly. And also, if you do not have the EdgeFinder, got something cool for you. We are doing 40% off. Last week, we let people try the EdgeFinder for free on our website. That is unfortunately no longer going to be the option. However, we gave that option to give people the chance to try it out. And if you did try it out and you liked it, then check it out. We're doing 40% off the EdgeFinder this week. If you're interested in getting access to our tools here, of course, Top Setups Indicator helps traders to scan markets on a bigger and better, kind of more encompassed, insightful way. A lot of traders are just looking at technical charts. If you're somebody who wants to start incorporating our tools into your analysis, we have traders all over the world, places like Malaysia, all over Europe. We have North America, we have South America, we have people in Australia, people in Africa, people all over the world using our tools. If you do not currently have the EdgeFinder and want to start taking your fundamental analysis to the next level, here's your chance to do so. We'll drop a link here in the chat to where you can speak directly to our support team if you're interested in getting 40% off. And for live stream viewers right now, check it out. We'll do 45% off during this live stream. Send us a direct message. It is a huge discount that we're doing this week. So take advantage of the EdgeFinder. If you don't yet have a copy, click this link right here. You'll be connected to a member of our support staff who can get you set up with a copy at a very low price. So there you go. Take advantage of it. Don't miss it. And up next, guys, we do have, of course, James coming on to the stream. Forex James, crowd favorite here, and he'll be taking over the stream just after this quick break. Like I said, if you're interested in getting access to the EdgeFinder, send us a direct message on our website, a1trading.com. Up next, here comes James. If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on TradingView.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
Good afternoon and good morning, everyone. I hope everyone's doing well. Happy Tuesday. I hope you stayed alive this morning. This morning, I guess it has been crazy. I'm sure Nick's gone over the VIX and things with you, so I won't go over all of that thing. However, we've just had NYSE open. Relatively big selling going on, continuing. Pre-market was bearish, market open bearish. So any short sellers have done very, very well today. Most of the bulls, most people in the stock market or generally in the Dow, NASDAQ, and the S&P are typically bullish. So it's been a bad day across the board, I would say. The US dollar is having a great day on the contrary, which is odd, to be quite honest. We were looking at this morning with my team, and we were just sat there trying to figure out, is there something we've missed? Because it came out of nowhere. It was, mic sounds off. Hold on. I think I know what that is. I just need to change a setting. Give me a sec. That should be better. Is it? Let me know. Anyway, we were discussing what's caused the dollar to run higher, and it doesn't seem like there was anything other than the fact we had the US and the Canadian Labor Day yesterday, and we've also got quite a heavy news week ahead of us. So it was just a bit of a front loading of dollars. Interesting. The mic's not good. Let me just make sure it's the right mic. Yeah, I think so. I don't know. Anyway, as long as you can hear me, that's the main thing. So yeah, nothing overly interesting other than stock markets are down. The US dollar is doing very, very well. Dollar cross is down as well, which is good because that did it. Okay, great. I guess it was I was connected to the wrong mic. What was I saying? Mic's fine. Perfect. Okay, so yeah, it's good. It's good we've had some dollar strength because that gives me an opportunity to have a nice pullback in silver, gold, and a lot of other currencies as well. So it would be nice to be a buyer. I'd still like to get into a long position on silver to meet this UBS target for the second quarter of 2026. I think that would be perfect. Same thing here on gold. I noticed Nick looking at gold as well. I think we've got a very, very similar idea in terms of we're just looking for basically a retest on the resistance, nothing complex going on there. Although, big news, we were all wrong. Bashi specifically was wrong.
So FX Bashi in the chat expected gold to break the range in November. We did a poll last week where you guys said that we were going to have the break of the range on the rate cut. We were wrong. I mean, I didn't really have one, so technically I wasn't wrong. But yeah, gold running crazy. It's nice to see that range finally get broken out of. The only thing now is, can we break and hold above the previous all-time high? Maybe. We will have to see. Nat gas, I'm not going to go into nat gas because I don't know enough about it. New Zealand yen was interesting. I was looking at that this morning during when the dollar was rallying, and obviously when we have the dollar rallying, we often have the yen doing not so good, which is what we saw, where we saw New Zealand yen going up. We saw CAD yen doing very, very well as well. At this 200 moving average, I was really considering taking a short position, but I just thought it was a bit too irresponsible, a bit too hasty. So this is the idea I'm currently sat with. If we can come back up and retest this zone again, I think I'd be quite happy to go in for another, to go in for a short. Basically just playing on central banks there, nothing overly fancy. Dollar yen. Now, it really depends where you stand with the dollar. Are you a bull or are you a bear? If you are bearish on the dollar, this is a really, really good opportunity to be selling dollars, because you've just got quite a nice premium, and that premium is still here with obviously dollar yen doing quite well, currently at the top of this range, which is quite nice for me. I am considering going short later today with a relatively tight stop. And the reason I'm considering a tight stop here is because if we do start breaking higher, there is nothing stopping price coming all the way back up to around 150.755. So obviously I don't want to stop loss here, because there's just no need to, because if it does come into this area, this is sort of the next stop. A stop loss here is just a bit too wide for me, so I may as well take advantage, just have a very, very tight stop and see what happens. Again, we do have some targets down here. MUFG, Goldman Sachs, and Nomura. MUFG's at 143.5, Goldman Sachs and Nomura is at 142. Euro dollar also, we've got, again, I think we've got some really, really good opportunities, obviously, assuming that you are bearish on the dollar. Euro dollar here came down to the, where's my brush? Here came down to the 200 moving average, showed a very, very quick rejection, and we've now got a very strong H4 bullish candle forming. So if we can close bullish on euro dollar, it might be a good opportunity to get long. Not my favorite idea, but the idea, the sort of thought process is there. Grabbing coffee, yeah, I could do with a coffee. What else do we have? The DAX. Now, I was quite fortunate on this one because, in fact, no, I was fortunate on the NASDAQ, which I'll move on to. But it's the same idea, really. I was looking at the DAX and the NASDAQ because they both had a very, very nice trend here. And I was considering being a buyer of both and being long. What prevented me from doing that, however, was the EdgeFinder, because I like to use the EdgeFinder as a confirmation on top of my other macro research. Because the EdgeFinder wasn't there, I was like, yeah, I'll hold off temporarily, especially considering this slope that we've had over the past couple of days that, to me, just told me sentiment wasn't really there. Aussie yen. I still like the idea of Aussie yen. This has actually proved quite a good point, because I don't know how many of you guys watch my channel, but on Sunday I put out a watch list every week, and Aussie yen was part of that watch list. And we were looking at, I think this is slightly off, but we had a trend line, something like this. And we were looking at this sort of rejections at this zone. And I was saying that oftentimes when you see something like this, obviously, let's just put it in replay mode, because now it doesn't look that great. But at the time, it did look very, very strong. So like this. So it looked perfect for a short position. But I was saying that when we see things like this in the market, where it's like, a monkey with no eyes would be able to spot this trend, often we're not going to see that work out. And that's the only reason I didn't take it. Everything else was saying that maybe I should go short, but it was just that, the gut instinct, I guess, that kept me away. Anyway, let's get off replay mode before I forget we're on there. So yeah, I am still looking to go short on the Aussie yen, but I just think the markets are in a bit of turmoil today, so I'm just going to chill. CAD yen. I love the idea of CAD yen. I think the Canadian economy is really struggling. They're in a massive deficit. Unemployment's relatively high. Their economy just isn't doing very well at all. The Bank of Japan obviously is likely to cut rates in October, so we do have a central bank divergence there for a potential short on CAD yen. But my watch list hasn't changed, I think, or hasn't changed much. I think CAD yen actually is really the only addition. Guys, how best can I grow my $50 account? Deposit another $99,950, and you'll be pretty much on the way. I like to train legs at the beginning of the week. Is that because you don't like walking for the rest of the week, or what? Okay. Sweet. So let's have a look at the EdgeFinder. The Dow is just falling off a cliff here. You know what's funny? I was scalping the Dow on the 1 minute, basically pre-market. So I was doing this, just scalping momentum. Unfortunately, I closed it pretty much right as the market opened, just because it was a bit of a risky play to make. Obviously, having a position open after such a bearish day on market open. But that would have been nice. Anyway, what was I looking at? EdgeFinder, that was it. So there's not really anything here of interest, to be honest. Gold, I think we all know we should be buying gold on dips, not financial advice. Swiss yen's bullish. Fundamentally, obviously, that's fine, but I'm a little bit hesitant to be going short yen right now. Silver, great play. Nikkei, I don't trade the Nikkei, so I'll ignore that. DAX is bearish, funnily enough. We've got dollar yen, dollar Swiss, and CAD Swiss as well. So I think we've got some options to be bearish. So as I said, if you are bearish on gold, and we've got the EdgeFinder giving us a bearish reading on dollar yen and dollar Swiss, maybe today is a good time to take advantage of that. I think, where's dollar Swiss gone here? I think I will be. Dollar Swiss also looks like a really, really great opportunity here. Really smooth pullback to our 200 moving average, wick rejection to the upside, and we've now got a a bearish engulfing candle. So if we can close below the previous candle on this H4, a stop maybe somewhere there and take profit at the next low, which would be sort of in the area of 0.79161. I think that's quite a smooth one. So I'm going to add that to the watch list. We do have New Zealand US dollar. Sadly, I didn't take this. It was sent out quite early this morning or late last night. I can't remember. I was sleeping though, so I didn't manage to catch this. But we are in a dollar long position just to benefit from the potential continuation if we do get one. And there's a contrarian view there as well, but I won't go into that one too much. Well, Swiss yen. We can have a look at Swiss yen. I want to live on the moon, Earth not safe anymore. Interesting. I'm not sure the moon's that safe. I don't think you'd breathe too well up there, especially if you've got asthma. It's dusty. Okay, so Swiss yen. Let me just see. So the issue I have is that Swiss yen is bullish on the EdgeFinder. So automatically I do want to be a buyer. The trend is to the upside as well. So we've got the 200 and the 50 here. So it makes sense to be looking for pullbacks here, continuation, possibly a take profit back into the previous highs at around the 185 level. However, again, as I've already said, I don't want to really be a seller of the yen just yet, or at all, to be honest. I think that, actually, let me just see what the S&B is saying. Just bear with me for a second. I've not done much research on the Swiss recently. S&B maintains neutral policy stance with its rate steady at 0%, inflation stable, and economic data steady ahead of September 25th rate decision. Yeah, I think I'd rather be short, to be quite honest. But of course, that is counter trading the EdgeFinder and counter trading the trend. So it's not ideal, but that is just where my bias lies. Where my bias lies, to be honest with you. So with that in mind, I think I would have to wait to see if price could come back, revisit these previous all-time highs, then potentially enter a short. But again, that is very, very risky given the market structure that we've got here on higher timeframes. Trying to be a seller is very difficult. I think we learned that at the start of this year. So unfortunately, I can't give you much there. I think, let's just see. I wonder if the put to call ratio is updated. I remember Nick was mentioning it. I'm not sure if it will have updated yet though. 29, no, it's not. Interesting, okay. Just hold on. I'm going to take a drink of water. Just give me a second. Apologize. I know it's not very professional. I got to stay hydrated in these streets. Okay, so we've had 15-minute candle close to the downside. NASDAQ showing a little bit more bullish momentum. Now we've settled into New York open. The question is, can we pull back from here? I don't know. I'm going to have a look at a higher time frame at NASDAQ. So this is what I was looking at. I was saying this before, that I was tempted to be a buyer of the NAS on the 200 and the trend line. I think it was technically, it was a very strong setup, but obviously fundamentally it was a little bit flawed. But yeah, this support level through here on NAS is quite nice. I do like the idea of being a buyer. However, I just don't know if there's really any reason to be a buyer. So when it comes to swing trading, I very rarely will swing trade any of the indices, so NAS, Dow, S&P, just because I don't really understand stocks that much. I'm not a stock guy. I am a currency guy. So I don't really know what's going on with the NASDAQ beyond the fact that obviously the Fed's going to cut rates or likely to cut rates. So I'm not sure I can justify being a buyer just yet until at least we have maybe some more structure to confirm that idea. The Dow is continuing lower. Really bad day for the Dow bulls. Wall Street struggling. Charles, hello. Carl is in $300 unrealized P&L. Carl, well done. Great to hear. PMI? Did we have PMI today? I thought today was quite flat. Oh, we do. Oh, my bad. I had absolutely no idea we had news coming out today. I appreciate the reminder. So we've got 12 minutes until news. We've got, who's coming on next? Marco is on after me. So I'll do PMIs with you because I suppose it would only run me over 2 minutes. I'm sure Marco wouldn't mind too much, I hope. So I'll do PMIs with you and then I'll hand it over to Marco and I will leave you alone for the day. So for, let's just see, let me actually see what's going on here. ISM Manufacturing Employment Index, previous, we don't have forecasts. ISM Manufacturing PMI is expected to come out at 49. Previous is 48. So if we do get an increase, especially an increase to 50 or above, that would be very, very good for dollar bulls. Would show a little bit of expansion. ISM Manufacturing prices paid. We are so overall, it seems like we are, or we should be expecting relatively better data for the dollar today. So let's just see. Let's see if that happens or not. The dollar's had a bit of a habit of disappointing the bulls over the past, how many months are we in now? 9 months? Did I see Royal Trades? I did. Hello, Royal. Good to see you. Anyone has recommendations to work a lot about bond markets? I would say YouTube, to be honest. Or if anyone is serious about learning fundamentals, and I mean sort of fundamentals beyond, what we discuss here, like the more core things like how to calculate GDP and all those types of, things that you don't necessarily need to place a trade, but things that may be useful. I would say go to things like Udemy. The online learning places are very, very good. I use those quite a lot, actually. I used one for digital marketing. and you get some really cool stuff on there. It's pretty cheap as well, to be fair. It's a lot cheaper than paying a lot of mentors. James forgets about news. Yeah, I do forget about news. We've got 10 minutes. I will do my best not to forget within that 10 minutes. Friendship ended with the dollar. Metals are my new best friend. Yeah, metals have done very well. Bond markets, find some old guy in a diaper. Yeah. Yeah, that's funny. My brother was asking me, I saw him a couple of weeks ago. He's quite young. He doesn't invest or anything. He's 15, but he was asking me about investments and things. He was just curious about how they worked. And he's like, oh yeah, my friend's dad has bonds. Are they good? I was like, well, depends what you want. You know, you wouldn't invest in bonds really as someone who was young, wanted high growth and those types of things. Anyway, I don't know why I'm bringing that up, but yeah, I think the old people thing is valid. Gold new baths again. Max, I'm not sure what baths are. Is that new terminology that I need to update my brain on? It's okay, I'll remind you, James. Just going to keep an eye on news here. We've got 8 minutes or so. Dollar's continuing lower. It seems like the indices markets are pulling back now. We're seeing a little bit of a recovery. Whether that will be sustained is a different story. Yeah, we'll see. It could be a correction. So this is a complete assumption. Yeah, the Bollingers are oversold slightly here. So it wouldn't be a surprise, just because obviously the markets need to generally have these pullbacks within trends just to correct themselves a bit. So it's very, very possible we see a little bit of a correction here and then continue lower. But who knows, especially with news coming out in a couple of minutes. Oh, all-time highs. All right, okay. I can't remember what your question was. Was it gold to all-time highs? I think that's what you asked. Definitely possible. Well, it will happen. It's inevitable, but it's just a question of when. Ideally, not yet. I would love to see this. So we intersect 200 moving average, then continue higher, or we retest this previous resistance and then go higher. Either of those two things, I'll be a happy chicken. If we do end up rallying to all-time highs from here, it'll be unfortunate just because I missed the move. But again, I think it is 100% possible. When you're 70, it's better to enjoy your life than a measly net 1% gain. Well, yeah, I was about to say, but unless you've got millions, yeah, that 1% can be massive. I expected NFP to push gold to all-time highs. Do you mean last NFP, Bashi, or the NFP we've got coming on Friday? I'm just going to mark these up because my New York session strategy is going to be in play once this candle closes. Okay. Sub to James. I appreciate that. This Friday, yeah, I wouldn't be surprised. I mean, actually, wait, hold on. Let me just make sure. We've got 6 minutes until we've got news. So let's have a quick look at NFP or the previous NFPs. Oops, that's not what I want. Labor market. There we go. That's what we want. Yeah, so NFP is interesting because it's just been on a downward spiral, really. We had one pretty good print here in April, decent in July. However, overall, it's still relatively low, but we're still beating forecasts. But then we've got to take into account the revision that we had in July. August was pretty poor. Well, the print, wait, hold on. Yeah, sorry, August. I forgot we're in September. August, pretty poor at 73. So it's a case really of, are you optimistic that this downtrend that we're seeing in NFP is going to get changed? I don't know. We could get a one-off higher print, but I'm just not very optimistic on NFP anymore. There used to be a time where I'd sit there and say, you know, NFP is going to be this, NFP is going to do really, really well. I just can't really sit there anymore and say that, just because, again, I've just been so disappointed. I'm like, you know, when you see those girlfriends and it's like, my boyfriend just disappoints me all the time. I feel like that. It's the relationship I've got with the dollar. It's just emotionally abusive. Hey, James, can I scalp with a $50 account? Yes, scalping with $50 is a lot more reasonable than swing trading with $50. Should you scalp with $50 though? No. You will need to have 1 to 500, 1 to 2,000 leverage just to be able to have 1 or 2 positions on. And it's going to be a mess. So if you've only got $50, I'll be honest, buy yourself some lunch. And I don't mean that in an offensive way. I'm just being honest, because, you know, $50, it takes maybe a couple of stops and that money's gone. And the reason I say that is not a case of you risk 1% in every trade, because when you're scalping the indices market, specifically, you know, NASDAQ, the S&P, the Dow, the DAX, their position sizing is very heavy. So if you're scalping those, you're very likely to just lose all that money in 1 or 2 trades. Scalp with $50, eBagging has more ROI. You know what though? I'm not going to. Yeah. Wait, what was your name? What was that guy's name? Steve. I know that maybe sounded a bit mean, but I'm not saying it to be mean. I'm just giving you a little bit of tough love. I think a lot of people have been there. You know, when we first get into the markets, we have maybe $100, $500, and it's like, how do I turn this into 10,000? It is sadly not possible. Well, possible, but very unlikely. 3 minutes until news. Again, I hope Marco doesn't mind me taking up a bit of his time. Should be okay. James, you were right about AJ. OT. Yeah, I know. I'm glad I was right, and not because I was right. I'm glad I was right, because if I wasn't right, I would have missed the perfect entry. So it would have been really sad. $50, have a good night and think about your future. I feel bad. It's funny, but I feel a bit bad. I'm not trying to be mean. Do you think news will be bullish for the dollar? It's well, from what I can see on forecasts, it seems like it should be good for the dollar. Whether it will be or not is a different question. So Nabs Debil and Ballout are both bearish dollar. I'm finding it difficult to find a reason to argue that right now. I've got 2 minutes left. I'll put the news on the screen when it comes out. Oh, you're stuck in it's too good to be true. Yeah, that's the way it goes. I hate to say it, but I'm fairly sure that's an ICT saying. I'm not going to say the words because I'm fairly sure it's a family-friendly stream. But it's like if it's too good, or it's too good to be true, or it too obvious, you're about to get effed, or whatever the saying was. James, you know DXY to 95. Yeah, you know, I've given up trying to defend the dollar. There was that period where I was very bullish, and then, you know, we've had 5 weeks. Wait, hold on. 1, 2, 3, 4, 5. 5 weeks on the 6th week where the dollar just isn't doing too much. We've had a short-term burst today, but obviously it's nothing in the grand scheme of things. It's really not relevant. What's the reason for UJ pumping? Well, the dollar did very well. I'll be honest, I'm not 100% sure why the dollar did so well today. I put it down to the idea that we had US Labor Day yesterday. We've got news coming in this week, so it's just an inflow of orders. So that's the reasoning I've got. If anyone knows different, let me know. ICT hedges his thoughts as well. That's quite funny. We've got 45 seconds. Sorry, guys, I'm just reading some messages. Bear with me for a second. Okay. Much sells at 3,500. psychology level in gold. Yeah, I suppose so. But we'll take a look at, actually, no, hold on. It's Marco after me. After the news comes, I've got to head off. So maybe Marco will cover gold again with you. So main one I'm watching is ISM Manufacturing PMI. So as I said, a bit of a disappointment so far. Manufacturing New Orders Index came out slightly higher. Main one, in my opinion, ISM Manufacturing PMI came out as a bit of a disappointment compared to forecast. Overall, a slight increase on the previous number, but I don't really think the markets are going to care too much as an increase on previous. I think they'll be more disappointed. S&P Global Manufacturing PMI did pop up to 48.3. So let's see what the dollar's doing. How did the dollar react off that? Let's go down time frames. 10 minutes. Yeah, dollar down. So it's more of, seems like the dollar participants have been disappointed by the news. Forecasts were not significantly higher. Forecasts were higher, however, than the data we've got. So yeah, this might be the catalyst for the dollar to correct some of that bullish move that we had this morning. Okay. Bearish for US dollar, indeed. Anyway, ladies and gentlemen, I am going to head off. It's Marco's trading journey up next. Don't leave. He's a great guy. You're in great hands with him. Stay safe. I'll see you all soon. And yeah, speak later.
If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hello, everyone. Welcome to another basically Marco's segment of the stream. So what has been happening today? Let's check it out. We had quite a lot of movement. This is my watch list for the fundamental strategy, pretty similar how Nick trades. So the NASDAQ pushing lower, finally getting a pullback. Gold crushing higher, silver pulling back just a little bit. Euro dollar has actually printed a bearish candle here. Although if we zoom in, it is now retracing. So let's see. Yeah, basically on the ISM manufacturing PMIs, which just came out, looks like we're getting some dollar weakness. Okay, so we're getting some dollar weakness on this one. If we check out, I don't think it's going to yet be updated in the EdgeFinder, but let's take a look. So ISM manufacturing, let's see. Here it is. So, okay, so it hasn't been updated yet, but basically the actual number came in a bit lower than the forecast, which, as you can see here, is a bearish US dollar impact and bearish for the stock market as well. So what is pretty cool is my Euro GBP position is now in profit. So I have been in this position for quite a while. I've been paying quite a lot of swaps. So this has been a pretty expensive position. And now it's finally getting some, let's say, signal of life and pushing higher. Now, I don't have a lot of confidence in this trade. I am looking to maybe have a take profit somewhere here and just close this position if it does reach those levels. I don't have a lot of confidence. This has been just chopping around for quite a long time now, or I may trail the position to the upside. If you want to get updates, definitely join the A1 Trading Discord, because this trade was live in the Discord. So floating a little bit of profit, but paid a lot of swaps, and I don't like how it's moving where it's super choppy. Now, what has happened? Why has this happened? Why such a huge reaction on everything? Especially, I mean, silver. I missed my entry on silver, unfortunately, and this thing just exploded higher for like 4%. Gold as well. Massive uptrend, really nice, broke into all-time highs. I do have a pending buy limit. Okay, I have a pending buy limit at this level. Will we reach the level? Will gold tag me in? Not sure. Not sure. It looks pretty impulsive. So I have read about this, and the main theory behind all of these moves. So why such a huge move this week when the news has just started to come out? So again, today we had ISM manufacturing, and NFP is on Friday. So you would expect the volatility to come in later in the week. But from what I have read, a lot of big players, a lot of big investors, a lot of big hedge fund managers, a lot of pension managers, pension fund managers, they have been on vacation just like everyone else. So they're normal people. They eat, they drink, they go to the toilet, and they go on vacations. And in August is the most popular month to go on a vacation. That is why possibly you had a pretty quiet, pretty choppy market in August, especially if we take a look. Yeah, just August has been super flat. I mean, if you check out our free, let's say, most popular assets, even euro dollar, super flat. And now those guys have come back from vacation. They're looking at the markets and they're seeing some things, and they want to reposition their trades. Okay, so give me just 1 second. So they basically want to reposition. They want to take different setups. They want to maybe sell some indices. They want to buy some gold, definitely. Buy some silver. Maybe sell some euro dollar. Maybe buy some euro GBP. Essentially, maybe buy a bit of dollar since we had a nice bullish reaction. So that is why that could be a reason why you're getting so much volatility. Today. You know, I've been in the A1 trading Discord, and I've seen a lot of traders are not sure what is happening. I don't have a concrete answer for you, but that's the best thing I can come up with. And that's what most experts that I follow say is people have been on vacation, big money, big guys. They're now back. They are seeing the markets. They are reassessing their positions, and they have decided to move their money from something into something else, right? So that's why you have such huge movements. So let me check the comments. Let's see. I hate Euro GBP as much as I hate Aussie NZD. Okay, I don't like either of them. Nobody does. How are the smaller businesses doing in your country? The ones that depend on immigration labor. Do you mean Croatia? Croatia is doing okay. It was never doing great. It was never doing bad. It's always been kind of meh, you know, somewhere in the middle. So nothing interesting in Croatia. If you do mean Croatia, but I don't think you mean Croatia. They go on the toilet. Yeah. So they're human. I wanted to say they do the exact things that we do. I think most of you guys went on vacation in August. I know I did. Okay, July was a bit better for me, but August as well. I went to the seaside, and I wasn't trading as much as I was, let's say, as much as I will be now in September or October. EUGU, GJ, okay, so Bashi is trading quite a lot of Forex stuff. Repositioning for the last quarter of the year, yes. So that is what most professionals are saying about the current market moves for today. Repositioning for the last quarter, people are back from vacation, volatility spikes. Usually you get a lot of activity in September, October, November. You know, it's the end of the year. People are trying to push for those last profits. People are trying to squeeze out as much profits as they can to better their yearly results, you know. So they may go a bit risky. They may take more trades. They want to improve their bottom line for that end of the year review. Euro GBP, Aussie USD, okay. GJ short. Markup Marco, have you seen my X? No. Did you send me a message on Twitter? I'm not that active on Twitter. I'm rarely on there. So send me a message on Discord. Much better to find me on Discord. If you want to join Zentum Trading, you can join for free, and you can find my profile on there. Everything is on my YouTube channel. So these big guys and their big vacations. Yeah, 4 weeks off. Pretty nice, pretty nice. So why can't we just say it? Big banks are back, and they saw an opportunity to buy dollar, make a quick buck. Possibly. So I was referring to the United States. Yeah, that's what I thought. No one cares about Croatia, such a small country. I posted a trade today. Okay, cool. Yeah, I'm not on X. I just maybe look at some funny videos on there, and it's very rare. So I much prefer YouTube as social media. I like YouTube much more. I'm more active on YouTube. So, but to be honest, social media is it sucks. You know, it's so bad. Just takes a lot of your time. There's nothing good on social media. Even if you're a trader, social media is pretty shitty. You know, much better to jump on Financial Juice, get your news for free on Financial Juice, and skip all of the noise, right? Skip all of the noise. So I've never once went on social media except YouTube, and I was like happier than when I started, you know. So I'm always more miserable after I finish scrolling through Instagram than before I start scrolling. GBP CAD. Okay, so we have GJ and we have GBP CAD. Let's take a look. GBP JPY should be going lower, right? A little bit. Okay, let's check on the EdgeFinder. GBP JPY. Let's see. Neutral. Okay, so neutral reading. I'm pretty bearish on the pound. I'm pretty bearish on UK economy right now. You know, I think it's a case of stagflation. If you look at things like the GDP growth for the UK, GBP, you know, it's kind of all over the place. So the GDP is not the best. NFP, not NFP, unemployment rate. I get confused sometimes. So kind of rising unemployment in the UK, right? And let me show you inflation. Inflation is actually going higher for the pound. So inflation trickling higher. Now, this is a case of stagflation. This is a case of stagflation. This is a case where the demand for the pound, demand for UK exports, demand for anything UK is lower. As the demand goes down, the price of the pound goes down as well. So I'm bearish on the pound, long-term bearish, short-term bearish. Yen, I don't know much about the yen right now. I don't have a clear bullish or bearish position. I think we're kind of flat here. So I agree with the EdgeFinder on GBP JPY. I think this is pretty neutral, and I don't have a view for you. I think we're stuck at a pretty significant level of resistance. Okay, so a pretty significant level of resistance, and I would not be trading this pair. I would maybe focus on Euro GBP. You know, I think the euro is a pretty strong currency right now. The pound is a pretty weak currency. So I'm not getting the polarity between the pound and the yen that I need. You want one currency to be extra strong. You want the other to be extra weak. That's what creates trends. If both currencies are kind of meh or weak, or both are strong, you're not going to get good trends. GBP CAD. GBP CAD. Okay. So not on Twitter, you must have impeccable mental health. Sometimes I jump on it because it's tough not to look at it, and sometimes I make a post, but it's just so bad. Like all of the illegal stuff that doesn't get posted on Instagram or TikTok, it gets posted on Twitter. So it's even worse than those two. What's your Discord handle? Let me check. Okay, so it's Marco G. Marco G. That's the handle, this one. And you can find me. So go to my YouTube channel, join my free Discord, Zentum Trading. My profile will be on there. RIP Croatia. Yeah, Croatia has been dead for a while now. So okay, we have some business talk here. Okay, so we have a question. We have a question about gold. Let's do GBP CAD first, and then we're going to take a look at gold. So GBP CAD, super flat. Looks super flat. Let's see. GBP CAD. Neutral. So makes sense with the EdgeFinder. If I had to give you a bias, it would be a bearish one because I'm pretty bearish on the GBP. As far as the CAD goes, we can run the stagflation analysis. So let's take a look at the CAD. Is Canada in a stagflation? Okay, GDP looks pretty bad. So GDP is bad. Unemployment, CAD is rising, kind of pretty high. You know, pretty high unemployment, possibly rising a little bit. And let's check inflation. Actually below target. So inflation looks to be below target, which is not a case of stagflation. Because of this, I would not say that the CAD is in a stagflation scenario, but there is possibility for rate cuts because looks like the GDP is not that great. Unemployment is pretty high, and they may want to cut interest rates. They have some room to cut rates because they are below the inflation rate target. So that could also be a bearish case for the CAD. That's why I think both currencies right now, GP is very weak, CAD kind of neutral / maybe even weak. I'm not getting the polarity that I need to see. And that's why the price action looks really flat. So that's why the price action looks super choppy, super flat, and not my favorite pair to see. If I was to trade this, how could you play this? Maybe you can look to sell the highs, sell at resistance. If we do approach this level, put your stop loss above, target at least these lows. I would be a seller in this market if I had to pick. But right now we're in the middle of the range, so I would not do anything. I would wait for the extreme. Okay, so let's see. Okay, so from Petar, do you expect for gold to have a huge fall after this all-time high? So it's in Croatian, but I translated it. So basically, the question is, do I expect a huge crash after the all-time high? Personally, no. I'm long-term bullish. So long-term, I'm expecting gold to appreciate. The reasoning is, what we currently have in the US is, I would say we have a strong economy. So we have a strong economy and rate cuts are incoming. So this is a pretty weird market condition. This is a pretty weird market environment. You usually want to raise interest rates if you have a strong economy, because a strong economy is going to push inflation higher. If you cut rates into that strong economy, it's like putting gasoline on a fire, okay? So you're going to make the inflation go very, very high. If we check the CPI for the US dollar, it's not at the target. Inflation is already pretty high. See, it's more around the 3%. So 2% target is very much below the current prints, right? And if you cut rates into that environment, it's not the best scenario. So people don't like it. Investors don't like it. I think the smart, big money players are going to see this and they're going to want to hedge their bets. They're going to want to avoid inflation. How can you avoid inflation? You can buy things like gold, silver, maybe you can do some yen, you can do some safe haven buying, possibly even bonds, but I wouldn't touch bonds. I don't think bonds are a good thing right now. Like many traders that I follow are actually bearish on bonds. You know, they're bearish on bonds, on the price of bonds at least. They expect and also if you get a US economy that is not doing well, if you get a US government that influences the Fed, that creates uncertainty, that creates fear, and that makes people sell bonds. Okay, that makes people sell bonds. So when people sell bonds, price of TLT goes down and the yield goes up. That's what the US doesn't want to see, but that's what happens. So I'm actually very bullish on gold. I do think buying from big players, especially now in September, as I talked about, most of the big players are back from vacation. They're seeing the markets. They're looking at the CPI. They're looking at inflation. They're seeing the US economy, which is pretty strong. They're looking at Powell, thinking, what the hell? You're going to cut rates into this market environment. You're going to spike inflation. You're going to damage the US. Okay, so they're going to buy gold. And I do think this is going to continue. I personally have a buy limit, which is probably not going to get hit. I have a buy limit at the 3.451 level. Okay, so 3,451 level, I have a buy limit, but looks like it's just going to continue going higher. My game plan, if we do go a bit higher here, I'm not sure if I want to be buying, because in that case, we will be pretty overextended. So I'll probably be waiting for a pullback, and I'm not expecting a crash. I'm actually expecting for us to maybe hit 3,600. Why not? It's pretty close. Silver, I have a target of 42. Okay, I think we're going to hit 42. I think there's a very high chance we're going to hit 42. I was looking for buy setups on silver in this area, and price went flying without me. So that was kind of bad, but what you going to do? And gold looks super healthy here. Super healthy. If rate cuts do come, it's going to be bullish for gold, for sure. So rate cuts, bearish for the US dollar, bullish for gold, bullish for the NASDAQ, bullish for the stock market. That's how it goes. Okay, let's see. What about the Aussie? Well, I can give you my fundamental reading for the Aussie. So kind of neutral, maybe a little bit bullish. But I'm not looking at any Aussie pairs right now. Okay. This is what I mean about Trump making poor economic decisions in the name of patriotism. Businesses are suffering and affecting the consumer at the local level, which will eventually work its way upward. Possibly. What I don't like is Trump pressuring the Fed. Fed has always been a different institution. Fed has always been under their own influence, let's say. And now Trump is going crazy. He's firing people. He's trying to put in his puppets potentially to replace Powell. So he's trying to put dovish people into the Fed. And that creates uncertainty, fear among investors. That is long-term going to damage the United States. Okay. Indices. Okay, indices, yeah. You must be crazy to sell gold right now. Well, yeah. I do think you must be crazy to sell gold, but also if everyone is buying, we could get a bit of a pullback. You know, if everyone is bullish, I know a lot of people are looking at this level. A lot of people are looking at this level, and a lot of people are buying. That's something I don't like about this position. I will still follow the plan, but I don't like when everyone knows what I know. The best scenario is when I know something that most people don't know. So my favorite thing is when I go to, let's say, some sort of a forum or Discord or generally on YouTube, and I see people saying the pound is bullish, the pound is bullish, the pound is bullish, but I have information that make the pound bearish. And when I see a lot of retail traders calling for a higher pound, I know going short on the pound is going to be a very, very good setup. So now that everyone is screaming buy gold, gold is breaking out all-time highs, just a bit problematic for me. But I'll still follow the plan, as I mentioned. The NASDAQ looks to finally be pulling back a little bit. S&P is also coming in lower. I'm looking at my levels. If you have been following my streams for a couple of weeks now, these are the same levels, basically. We went into the first level, but we very quickly rejected. I would like to get a bigger pullback, so I would still like to get, let's say, a 4%, maybe even a 5% pullback, just for the markets to pause a little bit. Let me check. What do the retail folks think about gold? Retail is actually short. No, sorry, retail is long. Okay, so retail is very long. That's why you're getting a negative reading here. Yeah, that's what I don't like. NASDAQ, let's see. Retail is actually going to be short, I'm guessing. Yeah, retail is probably going to be short here. Let me see. See, if you click this on the EdgeFinder, you can get more information about a specific there you can get a breakdown. So right now, most of the commitment of traders are long. Retail people, okay. Put to call ratio. Yeah, not that bad. Looks okay. So the NASDAQ, if we get a bit of a bigger pullback, I'll definitely get in. At these levels, I do think we are a bit overextended. Okay, I do still think we're a bit overextended, so I'm looking for a bit more downside. And I think most people are anticipating, most traders at least are waiting for a bit of a pullback. They're seeing a bit of momentum exhaustion here. They're seeing the momentum slow down. They're seeing at this point a lot of retail people were long. Some institutions were actually going short. So that was pretty interesting. That gives you a signal that probably this is a bit of a top. Can you look at oil? Sure, I can look at oil. Guys, I'm gonna head out. Yeah, no worries, Bashi. Thank you for joining and see you tomorrow. I'll be on the stream again. The problem is that both retail and big money is long gold, which is interesting. Yeah, you want to follow the institutions. You want to do the exact opposite of the retail. If both of them are buying, well, makes you a bit more careful. It should make you a bit more careful. In your opinion, what impact on indices stocks would a weak jobs data have? So if we get a weak NFP, I think gold goes up on that. I think gold definitely goes up on that. Stock market, not 100% sure. It would confirm rate cuts, but it's not really good if the economy is slowing down. So it would confirm rate cuts, but the economy would slow down. I'm not 100% sure what would happen, right? So we will have to see. What would I prefer to see, if you ask me? Well, I would like to maybe get a slower NFP and then a confirmation of rate cuts. I think that would be more interesting for the markets. But also it would be pretty interesting if you get a pretty strong NFP. So both cases, very interesting. For my positions, I would prefer rate cuts. If I'm being honest, looks like, whoa, this actually went all the way back to break even. Euro dollar went all the way back to break even. That's interesting. So we'll just have to wait it out. One thing I'm more certain of is no matter if you get a weak jobs print, or actually if you do get a weak jobs print, gold should go up. Gold should be pretty healthy and should continue going higher. That's because gold is fundamentally bullish. Bounced right off the level I noted on Discord. ES. What do you mean by ES? Which instrument do you mean by ES? See you then, Marco. Yeah, see you, Bashi. Okay. Let's see. Oil. There was a request for oil. Oil on the daily. Well, I personally have never put on a position on oil. I think it's pretty flat. I think it's pretty corrective. It is also highly impacted by geopolitics. Okay, so big impact. Geopolitics plays a huge part in the pricing of oil. See, Israel and Iran, some US and Russia stuff, some tariffs. So I don't like this. I think it looks super choppy. If we do get a strong US economy, if we do get a strong global economy, let's say, oil goes up, demand goes up. If you get a bad US economy print, if you get a tightening US economy, tightening world economy, this goes lower. If we check the EdgeFinder, I think we're going to get a neutral reading. So US oil is neutral right now. Yeah, so US oil is neutral. That's why I don't really want to give you any sort of a bias or any sort of a direction on this one. Technicals look choppy, technicals look flat, fundamentals are flat, or let's say the EdgeFinder is flat. That's why I'm being more patient. If I get a super nice opportunity, if I get something really interesting on oil, I'll take it. But so far I haven't gotten anything clear cut. SPX. Okay, SPX in futures. Oh, okay, cool. Yes, sure. We're gonna do the SPX, S&P 500. S&P 500, same story as the NASDAQ, pulling back today, getting a bit of a pullback. I would look at some key support levels, maybe this one. Second one would definitely be right here. And then I would look to buy at these levels. Long term, I think a buy setup is the smart way to go. I think the US economy will be strong, will remain being strong. I think they will keep on taking a lot of debt, pushing prices higher, pushing stock prices higher, taking on a lot more money. Russell could do pretty well. Small companies that don't make any money take on huge debt, spend that debt to inflate their stock price. So Russell could be doing pretty well. S&P I like, but I like the NASDAQ more. I pretty much have the same opinion. Okay, I'm running out of time, but I'm just going to finish with this. I have the same opinion for the NASDAQ as I have for the SPX. But the NASDAQ, for me, is more interesting. I think there's more opportunity with the NASDAQ because of artificial intelligence. So artificial intelligence should impact technology companies first, should increase their profit margins. Microsoft fired 5% of their workforce, probably replace them by AI and improving their profit margins. So yeah, it's a bloody game, but trading is a bloody business, if I'm being honest. You're profiting off of a crisis in most cases. So I prefer the NASDAQ. I think NASDAQ has more potential. It has been outperforming S&P in terms of volatility, in terms of returns, in terms of general movement. And that is pretty much it. But you can mirror my analysis on the NASDAQ on the S&P. That's about it. Thank you guys very much for watching. You can catch me tomorrow at the same time. So it's going to be 10 a.m. Eastern Standard Time. If you have any questions that I missed, catch me tomorrow and I'll do some analysis. Thank you. See you guys in the next stream.
Thanks for watching today's show. Remember to subscribe if you're new and to turn on post notifications so you don't miss the next one. If you're looking for more free trading content, consider joining our Telegram channel, linked in the description down below, or find free courses, prop firm discounts, and broker sign-up perks on our website a1trading.com. That's all for today. We'll see you back tomorrow.